Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Cube Report, the weekly DIA, IWM, and Bitcoin Report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.
Hi, it's Kerry Artek with Wicked Stocks, bringing you really an addendum to last week's big picture analysis in the SP 500 index, not the SPY. I do the Daily SPY Report daily, of course, through wickedstocks.com, but I also obviously cover the underlying index itself, which is key. And so I do post occasional videos on the index. I did post one last week, and needs to be sort of fine-tuned with the daily chart, as you'll see in a moment. I did record this for the week of Monday, March 28th, 2022. Let's take a look at the charts and I'll show you what I'm talking about. If you watched last week's video, I showed that a settlement above this descending channel top at 45.2170 last week would be considered a 3 to 5 week buy signal back to the 48.1862 high from January, and probably, given the fact that the long-term trend remains bullish above 4100.65, that channel bottom rising weekly. There's also a speed line in the same vicinity. I'll show that in a moment. Could actually yield new highs here over the next few months. We could push on to significantly higher price levels as we move into Q3, Q4. But that's really not the purpose here. I'm just kind of painting the broad brush stroke here. The fact that we did, yes, settle above that channel top on the weekly chart, not by a wide margin, certainly inside the 1% zone, but we clearly settled above it. On the weekly chart, it was at 45.2170 for the week, and we closed at 45.4306, a little over 20 points higher. This week, that same formation, by the way, this is familiar to you if you watched the last week's video, is 4491.71. But I almost want to erase these numbers from your mind because this happens all the time. The daily chart did not elicit the same buy signal. And, you know, there's this reason why this happens. It happens a lot on weekly versus daily chart analysis. And that has a lot to do with, you know, where the lows and the highs that you can see that I use, like those two spike lows, January and February, where they put out on a Monday, where they put out on a Friday, you know, the day of the week and the rate at which they descend affects both the weekly chart and the daily chart, and sometimes they're not in perfect sync with each other. So I'm going to zoom in here and show you that we did not close above the same exact channel top on the daily chart. It was at 45.43.78 last Friday, and we settled under that at 45.4306. So the daily chart is essentially saying not so fast, and that's just kind of the way it is. And this actually speaks to, and I'm going to sort of push my product a little bit here, the fact that I do a daily SPY report that you'll find on wickedstocks.com. I also do a daily triple Q report, and all of those are daily. They all use daily charts. It's a very fine-tuned process so that what happens on the weekly chart is taken into account, but the primary pivot points, the primary indicators, are based on daily chart analysis. So with regard to the S&P 500 index, we are merely testing meaningful channel resistance that may well contain not only weekly buying pressures, but possibly buying through April. And from here, we could fall back into the lower 4,100 area again over the next few weeks. And so this is the sort of the area that I'm talking about. I'm going to give you actually the day-to-day. And so this channel top is descending a little bit every day, and you could either print this off of your phone or print however it is that you want to jot these down. But I would recommend that if you're trading the index, in other words, if you're trading options off the index, or if you're using it for whatever purposes, that you might want to apprise yourself of these locations, because if we do close, for instance, Monday above 4538.88, then yes, the daily chart is also then in sync with the weekly chart in a delayed sense. 4818.62, the January high than expected over the next 3 to 5 weeks or less, and we could double top there, on a monthly basis, perhaps, maybe even longer. But I think over time we can continue into the 5,000, 5,100 area. I'm not really going to show that here. But the point I'm making here is watch these levels. This is a meaningful pivot point for the week and really through April trade, because below this, unable to close above it, we can fall back into the low 4,100 area, and closing above it, 4818.62 is expected within 3 to 5 weeks. I'm going to take a look at crude oil, because I still think that this is going to be kind of a pivotal commodity to watch. It's very inflation sensitive, of course, or the market certainly cues itself lately off of crude oil pricing. This is a monthly chart that you're looking at. I wanted to do the monthly chart so you could see all the way back to the early 80s. This contract started in NYMEX 1983. This is a monthly continuation chart. It presently reflects the May 22 futures contract, West Texas Intermediate. So if you're listening to CNBC or whatever the case may be, this is the West Texas Intermediate May futures price. We settled at 113.90 on Friday. And this monthly chart tells me, and it has for some time, for the last couple of weeks, that once we settled above that 91.90 to 92.53 area, it became sort of our new floor of longer term support into later year, and above which that 147.27 high is likely over the coming weeks / months. It's the timing of that is kind of difficult to ascertain, but I do have a clue as to when it'll be sooner, if it'll be sooner or later. But the point I'm making here is good base of support in the low 9,200 area. We actually fell back to that area after putting out that 130.50 high 3 weeks ago. The following week, we dropped all the way into the 93 handle. We dropped to within 1% of this long-term support area, and now we're back. We've regained we regained about 5/8, 62%. I'll show you that actually in just a moment. But this is a pivot point, 114.76. It is a descending channel top that is based on the same data that the 91.90 channel top is based on. But because the 91.90 channel top also is preceded by that long-term descending 2/3 speed line, I consider this a more significant area, a new floor of long-term support for crude, and above which the upper 140s anticipated in the weeks and months ahead. And 114.76 will have a lot to say about whether that's weeks or months. And that 114.76 level was 114.80 last week. Now, I could break this down on the weekly chart. It would make more sense if I zoomed in, but I'm not going to. I'm going to show you the daily continuation chart, and you can see how we pushed into that 114.80, now 114.76 area last week. The 5/8 upside Fibonacci was 116.38. We tagged that and fell back. And the low of the high on the daily chart, it was 115.54. So there's a lot going on in that zone. And it is an area that can contain buying through April perhaps, or into April trade. And now that we've tested it, we can fall back into the lower 90s again over the next few weeks, possibly sooner than that, where we could bottom out through Q2 through spring into later year perhaps, and above which the upper 140s remain a big picture objective. I'll say this, that if we were to close any week below 91.90, I think we have a good high for the year, and the market should give back much of these gains. I would be looking for the low 60s anyway, a barrel over the months to follow, but we're a long way from that right now. And inversely, if we close above 114.76, any day really, by a 1% margin, that number by the way is 115.90, but I'm going to leave it at 116.38. I think that is a good level also. It gives you a little bit more wiggle room, a little bit more a safe measure above 115.90. 115.90 is a 1% violation of 114.76. So if we close any day this week above 116.38, we could, by Friday's close, reach 130.50. And over the next 2 to 3 weeks, push into that 147.27 area. There's a long-term channel top, as you can see here, that goes back some 35 years to the 1985 low. Which at that point was the lowest this chart had been until the March 20 COVID low. The 85 low was $9.50 a barrel, and we got down to $6.50 a barrel in March of 2020. And so here we are, that mid to upper 140s, significant zone of long-term resistance, able to contain annual buying pressures, possibly generational highs, and if settled above, would be a significant upside continuation point into later year. Honestly, I wouldn't be surprised to see about 220 to 230 a barrel if that were to happen. And that is inflationary, which gets back to the point about the S&P. If crude oil happens to settle above that 116.38 level I showed in the previous slide, I would think that the SPY or the SP-500 would grow tired here, overbought, and fall off, perhaps back to that low 4,100 area over the next few weeks. Inversely, if crude, after having tested that 114.76 area last week, if it continues to fall off and back into the lower 90s over the next couple of weeks, then yeah, it's just a matter of time before the S&P elicits its buy signal that the weekly chart did last week, but the daily has yet to, above 45.38.88, closing above it. That bullish continuation to 48.18.62, I think, would be within the confines of crude oil holding below 114.76 a barrel. Now, at some point, I'm going to stop looking at crude as this inverse correlation loosens up. It's loosened up a bit, but I think with these long-term signals that we still may see here over the next week or two, we could see volatility explode once again, with crude oil rallying significantly if it gets above that 114.76 level. And so I can't help but think that just the opposite, that the S&P could fall off from here once again back into the lower 4,100 area. Now I'm going to give you this mid-band, or this other channel top. And, we closed above it about a week ago, and we fell back, came close to testing it the following day, but we're still inside this band. And so the numbers I'm giving you here are that inside band. In other words, I think this is a good level to have. You can see it's 4436.78 on Monday, and it's dropping to 4417.15 on Friday. And the point I'm making here is any daily settlement this week below that mid-band, 4436.78 on Monday, would indicate, I think, not only a good weekly high, but likely bearish continuation over the next few weeks down to that 4,100 area. And this is on the weekly chart. You can see this is long-term support for the S&P, 4,100.65 to 69.98, rising gradually. It is a combination rising channel bottom and 1/3 speed line, both trend defining and both essentially saying that this is a floor of support for the S&P through the year, and above which the 2-year bull market remains intact as per following off that March 2020 COVID low. And so I guess I'm just going to finish with this chart. I think this is the chart to finish with. 45.38.88. Just a reminder, it's basically not so fast. While the weekly chart shows a buy signal last week, by closing above this formation on the weekly chart, the daily chart doesn't comply just yet. And so it's going to be interesting to see how this plays out. On Monday, crude oil Sunday evening is, $5, $7, $8 a barrel higher and leapfrogs over that 114.90. I can't help but think that the S&P is going to ease back and maybe over the next few days close below the 44.36.78 formation. Now, obviously, the inverse is true. If crude falls off $5 or $7 a barrel overnight on Sunday, that we are likely to get that settlement on Monday above 45.38.88 in the S&P, then eliciting a 3 to 5 week buy signal up to 48.18.62. And that, oh, by the way, go to wickedstocks.com. You'll get half off your that deal runs out soon, like in another week or so. But if you wanted to take a look at the daily SPY report, it's only $25 a week. It's $25 a month. What am I saying? It's the daily SPY. I'm looking at this weekly chart, so I read the word week and I say week. The daily SPY report is $25 a month. And right now, if you subscribe to it by going to wickedstocks.com, clicking on the premium membership icon, and then filling out your payment information, you click the coupon and type in the words half off, all caps, all one phrase, HALFOFF, and it'll be $12.50 for an entire month. And then it'll go to $25, of course. Cancellation is allowed at any time. I also do the daily Triple Q, the NASDAQ 100 ETF, on a daily basis, and so forth and so on. But go to wickedstocks.com, become a member, and that'll be that. I'll be back soon. I don't know when. I mean, you'll get at least one stock pick on YouTube a week, and I try to supplement with at least another video. This may be it for the week. I'm not sure, but we'll see. I do appreciate you, watching our YouTube analysis. Please click like. Please click subscribe, and I'll be back soon. You have a great day.